This is 29A. Okay, so it's just the next tab over. This one is giving you a different format of the same process. It's just giving you a bunch of information. So for example, the ending balance of the bank statement. Okay, so it's telling you that piece of information. So what I would do if I were you is I would go through each of these and just start plugging them in to the reconciliation where they belong. So this first one, this is going to be the first line of this bank. This is going to be my unadjusted balance, unadjusted ending balance for the bank side of the reconciliation, 4870. Okay, then I'd go to the next one, B. The bank statement includes two charges for NSF checks to customers. One is for 400, one is for 110. So the question is this going to go on the bank side or the book side? Who has an opinion on that? Book side, okay? Because this is checks that we included in our accounting system, but it didn't actually get deposited. So these two items are going to go on this side, on the book side, as subtractions from cash. Okay, so if I were you, I would just, again, go through each one of these and just put them into the proper place. And by the end of it, you'll have everything you need to complete the reconciliation. Okay, so that's how I would approach this particular problem. Okay, so why don't you guys try it on your own? Okay, so uh, bank statement includes two charges for NSF checks. It looks like the total is $510. So the first question is bank side or book side? Well, again, these were included in my counting books, but it turned out to like not materialize. So my counting books right now are overstated. So I'm gonna have to adjust them downwards. Okay, so it's a book side subtraction. Okay, so um, I'm just gonna call this NSF checks. It's $510 total. Okay, next one, checks outstanding. Okay, so again, these are checks that I've written. I debited cash in my accounting system, gave them to the person that I owed money to, but those people have not yet deposited the money. So it hasn't yet flowed through to my bank statement. So this is going to be a bank side adjustment and it's going to be a subtraction because right now my bank balance is overstated because when those checks get deposited, it's going to get lowered. Okay, so I'm just going to adjust the balance lower to kind of account for that inevitable deposit of the check. So if I sum this up, and again, I think the first one, just got to be a little careful to include because I think it's formatted as text. So I just change it to a number. And now when I add these up, I see it's $1,510. So I'm going to do bank side subtraction. This is outstanding checks. 1,510. Okay, next. Stout Street Healthcare collects from a few customers by EFT. The bank statement lists $1,300 EFT deposit for collection on account. Okay, so this means that my customers, to pay off their accounts receivable, just directly send the money to my bank. Okay, so that means that my accounting books have not yet included this cash. Okay, because it went straight to the bank. They never sent me any notification of that. But now I look at my bank statement, I see, hey, my customers sent me $1,300. Okay, so that's going to be a book side adjustment, and it's going to be in addition. EFT payments, 1,300. Okay, next, the bank statement includes two special deposits that I have not yet recorded. So it's clearly indicating that this is a book side adjustment because I haven't recorded these. Okay, so it's explicitly answering question one for me. $970 of dividend revenue and $80 of interest revenue. These are positive adjustments to cash. I'm receiving these amounts. Okay, next. The bank statement lists a $30 subtraction for bank service charge. So again, this is another book side adjustment because my accounting books, this is the first source document that I have for this bank fee expense. So now I'm going to have to do a journal entry eventually for it. But for now, I still am just going to record it as a book side expense for the purpose of my reconciliation. On August 31st, we deposited $350, meaning that we made a journal entry to deposit $350, but this deposit does not appear on the bank statement. So the wording of this also makes it extremely explicit that this is a bank side adjustment because it's saying it does not appear on the bank statement. So that means I'll have to do an adjustment for it. Okay, so this is an example of a deposit in transit. So this is going to be an addition, deposit in transit, $350. The bank statement includes $1,000 deduction for a check drawn by Easy Freight Company. Okay, so this is something that's included in the bank statement. We are saying that this is an error. Okay, so this is a bank error. They took $1,000 out of my account that they shouldn't have. So to correct this, I'm going to have to do a bank side correction. And we're going to have to add that $1,000 back because it was a mistake. They should not have taken it out. And they're eventually going to add it back. But for the purposes of our reconciliation, we're going to add it back now just because we want to reconcile our cash balance. So this is going to be another addition back to the bank balance of 1,000 to correct that error. Okay, and now it's telling me that my book balance is 2,900. So this is kind of the last missing piece here. We needed this piece here, the unadjusted balance on the book side. Okay, so now we have everything. We've gone through, we've corrected from A through I. All of this stuff, all this information is now reflected in this reconciliation. Everyone agree? We went through everything? So now it's like the moment of truth. We got to see if they're going to reconcile. So we are going to get adjusted balances for both of these. Let's be explicit. This is adjusting ending balance for the bank. This is the adjusted ending balance for the book. Okay, so I'll start with unadjusted plus the positive adjustments, which are these two, minus the negative adjustment. And I'm just going to do the same thing on this side. Start with the unadjusted balance, add these three minus the subtraction adjustments. Magic, they balance. Okay, now the last step would be to do journal entries for all of these. Okay, so this first one, okay, EFT payment 1,300. Okay, we're adding cash, so that's always, all three of these are going to be debits to cash. These two are going to be credits to cash. Now, what the other side of the journal entry is, it will depend, right? So for this first one, debit to cash, it's going to be a credit to what? It was for some payments on account. So what do I got to do? Credit to what? Accounts receivable. Okay, so there's some sale that I made. It was on credit, so I would have debited accounts receivable, credited sales revenue or service revenue or whatever. Now that person is paying me off and they're no longer owing me money. So I'm going to reduce their account receivable balance. Next, dividend revenue. Okay, so again, that's debit to cash. It's simple. What is the credit? It's like the name of the adjustment. dividend, revenue. Is everyone good with that? Revenue, credit normal, right? So this is pretty straightforward. And then the other one was the same thing, cash, debit, but it was interest revenue. So similar, or 80. Okay. And then these two NSF checks. Okay. So this was uh, kind of the opposite of that, of this EFT. Okay. In this case, someone was paying me. In this case, two of my customers gave me cash checks to pay off accounts receivable, but they bluffed, okay, or they messed up. Okay, so I actually had done this journal entry when I first received the checks, but I have to undo that basically. Okay, so it's just going to be these same two accounts but reversed. Accounts receivable. So I'm going to basically reinstate that receivable and reduce the cash balance in my accounting books. Okay, so now these people owe me that money. They gave me the checks. I thought they paid me off, but now I'm like, they didn't actually pay me off. They still owe me the money. So now I've kind of reinstated that account receivable. Okay, does that make sense? Yeah? Okay. And then this one is also credit to cash, $30. And it's for bank fee expense. So again, as we saw here, all on the book side, all of these adjustments need a journal entry. The additions, these are all going to be debits to cash and then something else credited, depending on what it was for. And these subtractions are going to be credits to cash and debits to, whatever account is related. Okay, you have to kind of understand what the adjustment was for to complete the journal entry. But at least you have half of it. They're always going to include cash.